In today's video, I'm going to be showing you the EMA and MA trading strategy that I personally use in my trading and how you can apply it to yours as well. I'll be going in depth which ones I use and showing you exactly how to do it. Make sure you stick around to the end because I do have a giveaway going on currently and I'll be showing you how to get entered. With that being said, let's get right into it. So what is a moving average? A moving average simply takes the average price of an asset over a set number of days and shows you the overall trend. You can set that number of days in the settings. You can change it to 10, 200, so on. I'll be showing you all how to do that in today's video. The exponential moving average, the EMA, which I also use, works exactly like the moving average. It just gives you, more importance to recent prices, so it reacts a little bit more quickly than the regular moving average. Okay, now let me show you how to add it to your chart. Once you're in TradingView, I'm on the Bitcoin chart here. Simply go to Indicators and then search Moving Average. You want to add the Moving Average Simple and the Moving Average Exponential. They will show up right over here on the side. So currently it's just default, which is set at 9. The ones that I use is the 200 EMA and the 200 MA. So I'm going to change that here in the settings. Go to Inputs, change it to 200. And then I'm also going to be changing the color here in a second so we can tell the difference between the two. This is just the regular moving average. Let me just turn this one blue just for viewing purposes. Change it to there. Then go to EMA. And I'm going to change this one in inputs to 200 as well. And then going back here, changing this to dark color. And let me switch it to, there we go. Okay, so now you can see we do have the 200 SMA and the 200 EMA on the chart. And if we change timeframes, you can see this would be the 4-hour 200s here. Now I have made a custom indicator that makes it just a little bit more clear to view the trend, a little bit more clean. It's simply called the glitch trend. If you go down in my description below, I have a link right to it. You can add it straight to your TradingView and you can use it as well. It makes it a little bit more clean. I'll show you what it looks like here. If you turn it on, it just fills the area in between the two. Simply uses that 200 EMA and 200 MA, but it fills the area in between in, giving you a really nice clean trend. So that's what I'm going to be using today, but it is the same as the 200 EMA and the 200 SMA, just fills the area in between. So now that you have it added to your chart, let me just show you how you can use it in your trading. So starting off, we want to identify two trends in the market. We want to identify a low time frame trend and we want to identify a high time frame trend. So typically your low time frame trend will be somewhere between the 5-minute and the 30-minute time frame, with your high time frame trend between the 1 hour and the 4-hour time frame. So let's see if we can identify a low time frame trend here on Bitcoin currently. So if we just switch to the 5-minute time frame to start, go to recent price action, and let's see what the market is respecting. 5-minute trend, you can see, is not being respected. It's just getting chopped up quite a bit, not really being respected anywhere in the recent price action. So let's switch to the 10-minute time frame. Is this one being respected? No. You can see pretty choppy, not being respected as well. Switch to the 15-minute. Okay, 15-minute, you can see a lot better reaction here. You can see resistance on the way down, a little bit choppy here and there, but low time frame trends tend to be a bit choppy, but you want to find the one that is most respected on the lower time frames. So 15-minute 200s, let's just check 30-minute 200s yet. Okay, as you can see, 30-minute 200s over here wasn't really tested too much. Over here, though, it has been starting to get respected pretty recently. So I'm going to be using the 30-minute 200s. 15-minute 200s you could use as well, but to me, 30-minute 200s just looks a bit more clean, and they're basically in the same area currently anyway. So I'm going to be using the 30-minute 200s here. So now that we have identified the low time frame trend, let's see if we can identify the high time frame trend. So zooming out to the 1-hour time frame. Let's see if the 1-hour 200s are being respected. As you can see, quite choppy, not being respected whatsoever. We go to the 2-hour time frame. Okay, 2-hour time frame looks quite a bit better. You can see holding as support on the way up and resistance on the way down. It is a bit choppy over here with this wick and this bit of price action here. So let's see, maybe the 3-hour time frame is a bit better. So 3-hour 200s looks like the best trend portrayal in my opinion. Again, this comes down to personal preference mostly, but in general, you should just find the trend which the market is respecting. You could use 2-hour 200s if that looks clean to you, but I'm going to be using 3-hour 200s. As you can see, very well respected support on the way up, flipped into resistance once it was lost, and holding as resistance, yeah, as soon as it got below it. Okay, so now that you have identified those two trends, you have identified a low time frame trend, which we said was the 30-minute 200s, and then we have identified a high time frame trend, which is the 3-hour 200s. So these are the two trends you're going to be using in your trading for this example. So like I said before, you simply want to switch between time frames to find what the market is respecting. You don't want to be using something like the 1-hour 200s during this price action here, because as you can see, the market is not respecting it. You want to be using something like the 3-hour 200s in this price action here, because as you can see, market is very well respecting it. Over here, still holding as resistance. So you want to find what the market is respecting, because otherwise you will get chopped up quite a bit and take quite a few losing trades. So now let's get into how you can use this in your trading. I'm going to draw out a few scenarios here for you and just go over how different setups form along trends and how you can look to trade along them. Okay, so getting started here with the first example here, we have the market in an uptrend here. So we have our low time frame trend here, high time frame trend here. I'm just going to be drawing this out just for example purposes to explain the process behind it. So you would have price here uptrending along this low time frame trend. Okay, so as long as price continues to hold above this low time frame trend, you would continue to expect continuation higher into your next resistance levels and targets that you would have, because it remains above this low time frame trend. So as long as this holds, you can continue to expect higher. Now, of course, if there's resistance above, you always have to acknowledge that there is resistance and price could possibly reject from it and lose that low time frame trend. But as long as that low time frame trend holds, you can continue to expect price to continue higher. Now, where you got to change that process is when this low time frame trend is lost. Once price loses the low time frame trend, that's when you would look for a move down into your next levels and a test of that high time frame trend. So as soon as price loses this low time frame trend, you look for a test of that high time frame trend here. So you would look for a test along that high time frame trend, and then you would look for continuation higher from that high time frame trend as long as it held. Now, if it broke down below that high time frame trend yet, then you're looking at a downtrending market, which I will get to shortly, but let me just finish covering this one real quick. But now let's say price came down to here, but then continued higher from here. How would you react to that? Okay. So let's say, hypothetically, you bought back here on this trend test, okay? You held the whole way up here. Once price lost this trend, you went ahead and sold, okay? Looking for that test of the high time frame trend before continuation higher. Now, price front runs this high time frame trend and reclaims this low time frame trend once again. As soon as that low time frame trend is reclaimed once again, that's when you can look for continuation higher once again as price is back above that low time frame trend. So you would simply look for some sort of reclaim, a couple candle closes above. Ideally, you would have some sort of retest that you could buy into, and then you look for that continuation higher once again. Now, if price does not do that and instead continues down to this high time frame trend, you have two options here. What you can do is you can simply buy a test of this high time frame trend, okay? Or what you can do is you can wait for a reclaim of that low time frame trend, okay? So you get a test of the high time frame trend followed by a reclaim of that low time frame trend. You could bid a reclaim retest of that low time frame trend. So you have multiple options here. Ideally, in a bull market, if you get the opportunity to bid a test of the high time frame trend, that often ends up being some very good entries in a bull market. In a downtrend, it's a bit different, so let me go over how I would look to trade a downtrending market. It's the same as an uptrend, simply in reverse, so let me draw it out here for you guys real quick. So now let's go over how you would look to trade this in a downtrend. So you would have price below this low time frame trend, holding it as resistance on the way down, okay? So as long as it remains below this low time frame trend, you continue to look for price to continue lower. Now, once you see this low time frame trend reclaimed, that's when you look for a test of your high time frame trend, okay? So you look for price to continue higher into your high time frame trend. And once you got a test of this high time frame trend, that's when you look for possibly continuation lower from this high time frame trend as long as it holds as resistance. Now, what can happen in a bull market or in a high time frame uptrending market is you will see On a deeper pullback, you will lose both of these trends, but you will see price reclaim this low time frame trend, continue higher into this high time frame trend, only to consolidate a bit before reclaiming that high time frame trend and continuing higher. So in a high time frame uptrending market, especially like we are in now, these offer some of the best opportunities to buy. Gives you some of the highest risk to reward setups. So for example, if you bought a reclaim of this low time frame trend, okay, and looked for continuation higher into the high time frame trend, and we're betting on this high time frame trend to be reclaimed, you can see how your risk to reward can get exponentially better if you can bid those low time frame trend reclaims. And I'll be showing you some live examples of that here in just a second. So if price does come up to the high time frame trend and continues lower here and loses that low time frame trend, that's when you would once again continue to look for price to continue lower, because we got that test, that bearish retest of the high time frame trend, lost that low time frame trend, so you would look for continuation lower into whatever levels you have marked below. But oftentimes in a bull market, on the deeper pullbacks, you will see low time frame trend be reclaimed before reclaiming that higher time frame trend and continuing higher. Okay, so I want to explain one more scenario to you guys because this is very important. You want to know when to stop applying your trending mindset once the market begins to form a range. You don't want to continue applying your trending strategy once the market begins to range. You want to know when to adapt and switch to more of a ranging mindset. So let me show you really quick how you can identify when the market is beginning to chop. So if you have price continuing higher here, okay, continuing higher along your low time frame trend, price is continuing higher, or even let's say your high time frame trend, okay, and then price goes on to lose this trend, okay, so now you would look for continuation lower, okay, but then let's say this rolls over here. So trend begins to roll over here. This is just a rough drawing. Price goes on to reclaim this trend. Okay, so now that the trend is reclaimed, you would continue to look for continuation higher. Okay, because price has previously respected it as support, lost it, but then went on to reclaim it. So you look for continuation higher. Now, where this chop comes in is if it goes on to only to fail to continue higher and just breaks back below that trend. Okay. So now you're back below the trend. The EMAs and the MA, the 200 EMA and 200 MA are just going sideways here. So price has lost it, reclaimed it, and then lost it once again. At that point, I would stop applying that trend, okay? Because you're forming some sort of more of a range here in this area, and price is likely to continue chopping around in this region. So you don't want to be trying to bid a reclaim, sell a short a retest, long another reclaim, and so on. What you want to do is simply wait for price to break out of that range then, and then you can look for continuation higher along those trends. After price breaks out, you don't want to be trying to trade in a trending mindset once the market begins to chop. So basically, you just have once price loses that trend, reclaims it, and then loses it once again. Basically, that third time is when I would stop applying that trend because it is starting to get chopped up, not respected anymore, and likely some sort of range has formed. Okay, so now let's go back to the Bitcoin chart here and use those trends that we had identified earlier to find some setups here. So 30-minute 200s was our low time frame trend, we said. Okay, so now after showing you those examples, you can see here how we can begin to form a setup. So as you can see, price has been holding this as resistance on the way down here, okay? And price has just reclaimed these 30-minute 200s. But as we can see, price is still below these 3-hour 200s, okay? So what we could do here, that setup that I was saying in a bull market typically provides some pretty high returns, is bidding a retest of those low time frame trend reclaims. So what you could look for here is this retest here. Ideally, for these setups, you want to have some sort of confluence. You don't want to bid just a trend, just a test of the trends. You want to have some kind of confluence. So whether that is some sort of support or whether that is market structure, or you want to have some kind of confluence with the levels with your EMAs. You don't necessarily want to trade on them alone. For me personally, I simply use support levels and market structure confluence with my EMAs. So if you take a look here, we have a bit of support here in this region, along with these 30-minute 200s being reclaimed. So what you could look for is simply to buy this retest. Okay, and you would put your stop loss ideally below market structure here, so somewhere down in this region, and look for continuation higher into that high time frame trend. So 3-hour 200s here. Okay, but if you can hold on and see that 3-hour 200s reclaimed, okay, you can see how your risk to reward can become pretty high risk to reward. So about here, about 6R already. So what you would see is price continue higher, reclaim that high time frame trend, and continue higher. That's what you would basically be betting on. Now, if price goes up to this 3-hour 200s and then loses that 30-minute 200s, your low time frame trend, that's when you would just close your position, as price is likely headed lower because those high time frame trends are holding as resistance and price is breaking back below those low time frame trends. Okay, so now let me give you guys a few more examples here. Or instead of buying that reclaim of the 30-minute 200s, you can simply wait for these 3-hour 200s to be reclaimed and look to bid a test of these 3-hour 200s reclaim, retest, and then look for continuation higher from there. A bit more high confidence because the high time frame trend would then be reclaimed and you could look for higher, bit more confidence in that trade, but less risk to reward, typically if you take their setups. Of course, you always want to give more significance to the high time frame trend than the low time frame trend, simply because high time frame trends simply higher time frame, so often respected a lot more than those lower time frame trends. Okay, now let me show you a few more examples here on the chart and how I would look to trade them. So if we go back to the 4-hour 200s here, and you go back to a downtrending market back here, as you can see, this would have been the high time frame trend for sure you would have used back during this time period here. So as you can see, it's holding as resistance, and this is why it's a difference between a downtrending market and an uptrending market. You would not want to be buying those low time frame trend reclaims and looking for the higher time frame trend to be reclaimed, because high time frame downtrend, as you can see here, high time frame downtrend. So oftentimes these trends will hold as resistance and continue lower. These offer some pretty good short setups in a downtrending market. As you can see here, you would have reclaimed those lower time frame trends, but only to get stuck once again at those high time frame trends before continuing lower. Okay, here's another example here. As you can see, price is respecting these 4-hour 200s, resistance, support here as well, flipped into resistance, continuing lower. So once this trend is reclaimed, you can see reclaim, you could have looked for a retest somewhere in this region here, which you would have had your stop loss, depending where you put it, but I would have had mine probably somewhere in this region, maybe not the whole way down here. That would have been the technical place you probably should have had it, because that's below your market structure here. But I probably would have gotten some better risk to reward somewhere in this region here, and then looked for continuation higher from there because the high time frame trend has been reclaimed. So first level you would have looked for is probably around here at this resistance here, and then continuation higher. As you can see, offered a beautiful setup and the trend wasn't lost until somewhere in this region. Talking about where you would close now, let me show you how I would look to reap the most reward from these trades. So this would be a good example here. What you could do is you can simply, if you want to reap the most rewards, especially when price is in price discovery, it can get you some really, it can really maximize your profits. Now, it depends how much risk you want to take. For example, this trade, you could have simply held your entire position until that high time frame trend broke down instead of taking profit. Instead of taking some profit here or here or here, you would have simply held your entire position until price broke down below that high time frame trend. So you would have reaped more reward from it instead of simply closing some here and so on. Now, usually I don't do that with a high time frame position like this. I will take some profits at resistance on the way up. But if I show you an example back here, so somewhere in this, yeah, right here. So you can see price would be entering into price discovery here. As you can see, no price history before, even if we zoom out some more. So you can see previous all-time high was around this $69,000 level, and price broke into price discovery here. So as you can see, 4-hour 200s or being respected back through here. A little bit choppy here, but for the most part being held as support. So let's say you entered on this high time frame trend test right here, or let's just say you got entered somewhere in that region. Maybe you didn't get the exact bottom, and you looked for continuation higher from there. Now, instead of taking some profit off here or just on the way up here, you can simply hold your entire position until the low time frame trend breaks down. Okay, so your low time frame trend back here would have probably been 15-minute 200s if I had to guess. Let me just pull this over here. Pull this over a bit more. There we go. Okay, so 15-minute 200s, yeah, you see 15-minute 200s would have been your low time frame trend, held as resistance, support on the way up. So I would have held my entire position. Not every time do I do this, but especially when price is breaking into price discovery, this can get you a lot more profit than simply taking some profit along the way up. Simply hold your entire position until that low time frame trend breaks down, and that's when your first take profit would hit. So as you can see, price held this trend the entire way up until it broke down over here. So that would have been my first take profit, and then I would have held the remainder until your high time frame trend broke down, which, as you can see, high time frame trend has finally broken down over here. So we would be using 3-hour 200s now. But as you can see right here, so you would close somewhere in this region. Sure, you missed out on this bit of price action here, but you reaped more reward doing this than simply taking profit along the way up here. You can get a lot more profit a lot of times just simply holding until that low time frame trend has broken down, and maybe closing half your position there and then leaving the remainder open until that high time frame trend breaks down. So this wraps up today's video. Hopefully this gave you a good overview of the system that I use. This was simply just the basics of the system. I will be going a lot more in depth in some later videos that I have. If you have any topics or parts of this system you want me to cover in the later videos, please drop it in the comments below and I will try to cover that in the next few videos I make. As far as that giveaway, I do have a giveaway going on currently for the month of January in my free Telegram. Link will be in the description below. Completely free to join. Link is in the description below. The giveaway will be pinned at the top of my Telegram channel and show you how you can get entered. It's pretty simple. Links straight below, as well as the link for this indicator if you want to add it to your chart, or you can simply use the EMA and the SMA standard indicator from TradingView. But hopefully you enjoyed, and see you guys in the next one. Peace.